Welcome to Thoughts on the Market. I'm Michael Zezas, Head of Public Policy Research and Municipal Strategy for Morgan Stanley. Along with my colleagues bringing you a variety of perspectives, I'll be talking about the intersection between U.S. public policy and financial markets. It's Wednesday, March 10th at 11 a.m. in New York. A decade ago, your average investor might not have cared to account for politics in their portfolio. Now, they have to. Gone are the days when investors could just think about the Fed and the business cycle, just assume that the dynamics of global trade, fiscal policy, taxation, and geopolitical tensions were either slow-moving or unchanging. Investors now have to track the big political economy trends, and we've covered them for you here too, trends including globalization, multipolarity, and the infrastructure supercycle. But we think it's valuable to zoom in from those broad multi-year trends and instead focus in on how those dynamics are creating market catalysts over the next 12 months. In our recent geopolitical risk playbook, we focus on 5 dynamics in particular: the shift in U.S. fiscal policy from reactive to proactive, a coming return to trade tensions with China, the beginning of a global energy transition, global digital tax negotiations, and the potential for a green border tax in the EU. We'll hit all of these topics in coming episodes, but for now let's just scratch the surface on the U.S.-China issue. The last time tensions flared in 2018 and 2019, tariff escalation resulted in higher corporate costs, lower corporate confidence, and lower corporate capital expenditures, nearly tipping the global economy into recession. This time we think the impacts are more nuanced. That's because the U.S. is taking a more eclectic approach to its relationship with China. Yes, we fully expect non-tariff barriers like export restrictions to remain a staple of U.S. policy, but the major domestic economic investment through infrastructure spending is also likely part of the strategy. So while you could see some stress in the semiconductor business, which sits at the intersection of U.S.-China trade and the U.S.'s desire to protect critical technologies, you could also see construction and materials names benefit from this dynamic. More to come, of course, but the takeaway is this: big policy trends are now big portfolio trends. Thanks for listening. If you enjoy the show, please share Thoughts on the Market with a friend or a colleague, or leave us a review on Apple Podcasts. It helps more people find the show.
The preceding content is informational only and based on information available when created. It is not an offer or a solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.